Hey everybody, welcome back to Actual Investing. Today we have a bit of a different video for you. I am joined by a longtime friend of mine who is interested in getting into investing and wants to know where to start. So if you're a new investor, this is going to be the perfect video for you. It's going to give you all the basics and the starting point if you're totally confused about where to begin. And if you're an experienced investor, you can still enjoy this video and see what it is there is to learn as a newbie investor. So my friend here today is going to be calling in, and he's just going to start giving me some questions. So this is totally unscripted. We're just going to kind of go along and see what questions he has and see how well I can answer them. So thank you for joining me today. What is like your first basic question that you would want to know about investing or stocks or anything in that realm?
Yeah. When we originally came up with this idea, I believe we did call it Stocks for Dummies with an actual dummy. So I am happy to be your actual dummy. My first question is, what is a stock?
That's a great question. And I was going to reference that, but I didn't want to throw you under the bus like that. So I appreciate you bringing it up. Yes, this is Stocks for Dummies with a dummy, self-diagnosed dummy. So that's a great question. So a stock really is ownership in a company. So all stocks are tied to a company. Not all companies can be traded on the stock market. So you have what's known as private companies and public companies. So essentially, at the very basic level, private companies do not have a stock that you can go out and buy easily on the stock market, but a public company does. Typically, private companies tend to be smaller and public companies tend to be bigger, but not always. But essentially, when you are buying shares of a stock, like let's say Apple, if you buy 10 shares of Apple, you own a very, very small fraction of 1% of the company Apple. And so shares do come with, certain things like voting rights. So you can, if you have enough shares, your voice actually makes a difference at the company. You can vote on important things like when they're appointing a new person to the board of directors or different types of business decisions like that. So at its heart, a stock is ownership in a company, and you would buy one if you believe that that company is going to be around for a long time and is going to continue to churn out profits.
So you talked about the difference between a public stock and a private stock. And my question is, when does a company go public? And how do I know, besides their stock being available, that they are a public company?
That's a good question. So that's called an IPO, initial public offering, is when a company decides that they're done being private and they're ready to sell their shares in the open stock market. So they would have to file and register with whichever exchange they want to trade on. So in the United States, the two major exchanges are the New York Stock Exchange and the Nasdaq exchange. The New York Stock Exchange owned by the New York Stock Exchange, the Nasdaq owned by Nasdaq. There's a company that owns that exchange, and they manage that exchange. And so you would pay money to either of those organizations and submit paperwork in order to be listed on that exchange. And there's a big, long vetting process. And assuming your company passes the vetting process, then your company is able to list, and they call that an IPO. So on your first day of trading, you would sell your shares, you being the company, would sell your shares to the open market at a predetermined price. And any shares that you sell to the market, you get that in cash. So a lot of times companies, when they're really ramping up and need a little bit more cash to run, they will do an IPO so that they can raise cash from, new investors who might want to buy in hopes that this company is going to be the next big thing. And how you find out if there's an IPO, if you go to the New York Stock Exchange website or the Nasdaq website, they'll have a list of upcoming IPOs, and they'll say, this company filed, this company has a date set, that kind of thing. So that's one way to be in the loop. But also news websites will usually kind of cram it down your throat if you're following the stock market. They'll say, hey, this big company is IPOing today, everybody pay attention. The last big one that I can think of, Airbnb was a huge IPO, Coinbase, some recent big IPOs that everyone was talking about. So, yeah.
So you talked about the New York Stock Exchange and Nasdaq. So they're two different companies that can list stocks. Can a stock be on both Nasdaq and the New York Stock Exchange, or can only one of those companies list a stock?
There are cases where you could be dual listed on the New York Stock Exchange and the Nasdaq, but typically they'll pick one or the other. Traditionally, the Nasdaq was kind of more the tech-centric exchange. So if you were a tech company or a smaller company, you would usually list on the Nasdaq because they have a bit more lax requirements and it's a little bit cheaper. So if you're a big, more established company, usually the New York Stock Exchange would be the way to go. And also there was a thing, it's not a thing anymore, but if you had 4 letters in your ticker, that was the NASDAQ. And if you had 3 or fewer letters, you were the New York Stock Exchange. That's changed. Now you can have any amount of letters on either exchange, but that used to be another kind of funny thing.
So that actually leads me to one of my other questions, but I first want to just make sure I've got this clear. So basically, if I'm supposed to think of it like a farmer's market, right?
Okay.
I've got 2 competing stands like across from each other, and one's NASDAQ and one's the New York Stock Exchange. And like New York Stock Exchange might have honey, but NASDAQ has maybe apples for me, right? So I'm going to them for different things.
Yeah.
Even if they're sort of competitors, right?
Yeah, absolutely. That's actually a really good analogy, a good way to put it. Yeah, so you'd still go to the farmer's market, so we can consider that like the stock market, and you can still buy like groceries or stocks from both exchanges, and you still hold them in your, shopping cart or your portfolio. But yeah, they're just from two different exchanges. But ultimately, there's not a big difference from like me and you, for our perspective, when buying stocks. You would still buy them in the same way, no matter which exchange. So you'd open up your brokerage account, you type in the ticker. You don't have to type in which exchange it's on because the ticker is going to be unique. So you can't reuse tickers on those 2 exchanges. So your brokerage will know whether it's the New York Stock Exchange or the NASDAQ. You really don't have to think about it. I don't even think I could tell you which exchange most of my stocks traded on, whether it's New York Stock Exchange or NASDAQ. It's not something you actually have to keep up with.
Okay, so that's good to know. Brokerage, that is something like I've seen and heard about, like Charles Schwab. Like that's like a Charles Schwab account, right?
Yeah, that's exactly what it is. So Charles Schwab, Fidelity, and Vanguard, those are kind of the 3 that I recommend. Those are the big 3, I guess. There's smaller brokerage accounts that are popular with like Gen Z and millennials. So you've probably heard of like Robinhood or Webull or something like that. But yeah, that's a brokerage. And essentially all they do is kind of just facilitate you buying the stocks. And then they're also what's known as a custodian. So they hold your stocks as well for you in your name. So like let's say you opened an IRA with Charles Schwab, it would be, the Bob Smith IRA, and then Charles Schwab would own those stocks that you bought for benefit of Bob Smith kind of thing. So they sort of just facilitate everything. Yeah.
So to go back to the farmer's market, it sort of sounds like the brokerage is really our shopping cart if like the portfolio would be our shopping list of like, this is what we need. And then the shopping cart holds that and in this instance directs me to wherever that needs to be.
I love that. That's exactly it. Yeah.
So we were talking about how when you go into something like Charles Schwab, you have to type in the ticker.
Yeah.
So I understand like the ticker is kind of like the shorthand for this is this stock. So how do you decide the ticker? And how important is it for me to know a stock's ticker?
That's a good question too. It's not terribly important because you can always look up a ticker of a company. For me, I worked around stocks for a very long time. So my wife's always like, how do you remember all these tickers? You just kind of like start to associate them. Some of them make sense and some of them are kind of strange. But the process is really, there's nothing much to it. The company's executives kind of just decide when they go to have their IPO. You can change your ticker. It's not the smoothest process. You do have to like pay fees and go through and do a bunch of paperwork, and then everyone has to change that data in their system. So it's quite annoying, but you can change your ticker. So big example I can think of is Facebook. They were FB for the longest time, and then they transitioned to Meta. So they changed their ticker from FB to META. So you can change it, but you don't have to know. All you could do is just go to Google and say like Walmart stock and type that into Google. They'll pull up New York Stock Exchange WMT. So you know that WMT is Walmart's ticker. So there's no need to memorize them or to really know what they are. You can always just Google search it.
I guess my next question is, how do I know what stocks I should be buying and what to steer away from besides your YouTube channel?
I like the shameless plug. Yeah. I like to follow the principle of invest in what you know. So a lot of times when people ask me what stocks they should be looking at or interested in, I usually ask them, well, first I ask them what their goals are with investing. And then second of all, I'll ask them, are there any companies that you like? Are there any industries that you're interested in? So if I have a friend who's an engineer, he might be interested in automation and things like that. And then if I have a friend who works in healthcare, they might be interested in pharmaceutical companies or medical devices and that kind of thing. So that's usually where I start. But honestly, I think the best advice is that you can't go wrong with just buying index funds. So you may have heard of index funds. They're essentially just a basket of a whole bunch of stocks in one. So you buy one ticker, and in reality, you are buying an index of, like if you're buying the S&P 500, for example, an index of 500 stocks or an index of a bunch of stocks. And then that's a great way if you don't want to spend time researching. You can still have a nice diversified portfolio and not have to think about it. But yeah, going back to your question, if you did want to buy individual stocks, I'd say, what's something you're interested in? What's, a type of company that you might have a lot of knowledge on, and you might know, which companies have a competitive advantage, because that's ultimately what makes a company stick around for a long time and continue to be profitable is they have the right product in the right market, they have a competitive advantage, and they have a well-run business that's going to be able to have that longevity. I hope that answered your question.
So it does lead me to three things that I just want to make sure I understand. Mm-hmm. So one, it sounds like I should be clear on what I want to do with my portfolio. Like, what is my portfolio achieving? Mm-hmm. What is the goal here? Mm-hmm. What should be the goals, or what are the most common goals with creating a stock portfolio? Is it just to earn money? Is it to have diversible income stream? Like, what are some of the goals for someone who's looking to invest in the stock market or is interested in learning more about it?
There's a lot of goals. I think ultimately the goal is to make money. But usually when I worked in investment, like in wealth management firms, I'll say, usually they kind of break it down simply into two goals. So one might be for younger people, and they call that capital appreciation or just growth. You have $1,000, you want that to be $10,000 someday. That's capital appreciation. And then you might have the retiree who's 60, who, just is willing to live on their portfolio. They've already done the capital appreciation phase, the growing phase. And so we call that the income phase. So you might invest in stocks that pay dividends, which is where the stock pays you cash, usually on a quarterly basis. And then sometimes people live off of that, or they use that to supplement, Social Security or their pension, that kind of thing. So those are the two main goals, either growing your money or getting yield or income from your money, like the passive income, like you talked about. For me, so obviously it's the capital appreciation where I want it to grow. And essentially what I want it to do is to outpace inflation at the very bare minimum. But then I also want it to, provide above inflation returns so that can compound. And then, in 20 to 30 years, when I look to retire, the money that I invested along the way will have grown into something that can, support my living expenses. So that's, I think, kind of at its heart, the main goal that people have.
So someone like me right now should be thinking about capital growth,
appreciation,
growing,
yep.
Appreciating my income, appreciating my assets. Mm-hmm. And I can do that through those brokerage accounts. Yeah. Now, you use the word S&P 500. Mm-hmm. Is that the same thing as the New York Stock Exchange and Nasdaq, or is that a different thing?
That's I keep saying this, but that's a really good question too, because the S&P 500 is kind of what people use to describe the market. So when they say, oh, the market was up today, they're usually talking about the S&P 500. And it's interesting, it's separate from the Nasdaq and the New York Stock Exchange. So those two, the Nasdaq and NYSE, they are exchanges that stocks trade on. The S&P 500 is an index, so it essentially is just tracking 500 stocks. So S&P Global is the company that manages the S&P 500, and they themselves are a public company. SPGI is the ticker. And so what they do is they look at its heart, it's the 500 largest companies that are publicly traded on both the New York Stock Exchange and the Nasdaq. So it doesn't matter which one, as long as they're one of the largest companies in the US, they're going to be in the S&P 500. But yeah, so it's completely separate from the Nasdaq and the New York Stock Exchange. But since it's the 500 biggest companies, generally, I mean, there's some other rules and stipulations, but generally it's the 500 biggest companies in the US. That makes up most of the U.S. market. And so if the S&P is up, you can imagine that most stocks that you're going to be looking at are also up. And if it's down, most stocks are going to be down. Obviously, they can all go their own ways, but it's a good way to look at kind of the overall U.S. market. And it is U.S. specific, not international. So, yeah.
So to bring it back to our farmers market, if Nasdaq and the New York Stock Exchange are farm stands that are selling our groceries, it might be the marketplace itself is the S&P 500 that offers those groceries and has a particular trend of groceries within it.
Yeah, it could even be like the billboard sign on the outside of the farmers market that talks about what everyone has
What's
for
in,
sale.
what's out, yeah.
yeah, exactly. Because they really are just kind of like the people who determine what goes into this basket, this index. So yeah.
And I know we're coming up on time, so let me just ask one more question about, you were talking about index funds. So you were talking about index funds are something that I can just type in the ticker for, and then instead of giving me like one stock from one company, it kind of gives me a small portfolio.
Yeah, exactly. So, sorry,
so it's like kind of like a goodie basket, right? Like,
yeah,
I could grab from Nasdaq or the New York Stock Exchange. What all is included in an index fund? Is it normally stock in one realm, like just in one like tech realm, or is it across different areas of interest?
It kind of depends. So generally when people talk about index funds, they mean something that tracks like a broad index. So the S&P, there's S&P index funds, so S&P 500 index funds. So the big ones might be SPY, that's an S&P 500 index fund, or VOO, Roman numeral 500. That's another S&P 500 index fund that's quite popular. And those are going to follow the S&P exactly. So they'll just hold whatever the S&P has determined is those 500 biggest companies, and the amount of each company that's in it, they call that the holdings or the composition of the fund, depends on how big the company is. So right now, looking at the S&P 500, the top company in the S&P 500 index fund would be Apple, and it's going to be about 7% of the fund. Apple is, giant company. They're an over $2 trillion company. And then Microsoft and NVIDIA, those are going to be the biggest, percentages of the fund, but it's also going to hold all kinds of stocks. So if you go down, you're going to find stuff like Coca-Cola and Pepsi and Adobe and Salesforce and Walmart. But those, since you're buying a huge index of companies, those are only going to be like 0.5% of the total fund. So if you put in $100 into an S&P 500 index fund, you're only buying like 50 cents of Walmart or 50 cents of Coca-Cola. So that's kind of interesting. But there are also, to kind of go back to your question, there are what is known as a thematic fund. So if you wanted a fund that just tracks the healthcare sector, there's a healthcare fund. I'm looking at one right now that's I just pulled up, thematic funds. This is the retail ETF. So they take all, retail companies in the S&P 500. So this has like Chewy and Carvana and Victoria's Secret and Walmart. And so you can buy a fund that just tracks specific things. But generally, when you talk about an index fund, it's going to be those, those 500 biggest companies weighted by how big they are.
Well, amazing. That answers all of my questions, at least for this session.
Sweet.
Thank you so much for taking the time to talk with me about these beginner concepts of what a stock is and how I can start investing.
Of course. Yeah. Thanks for being willing to have this idea and to be on my little YouTube channel. I really appreciate it. And yeah, like he said, we are probably going to do follow-up episodes of this series. So if you like it, let me know in the comments below. Let me know if there's certain topics that you want us to talk about together. And if you did enjoy the video, please hit the like button for the almighty YouTube algorithm. It really does help the channel out. And if you disliked the video, seriously, just hit the dislike button. Let me know what I can do to improve. Thank you guys so much for watching, and I hope you all have an amazing day.